Hi, I'm Spencer from PFG Investments. We're really excited to be working with you and helping you as you contribute to the 401k and save for retirement. We think the 401k is a great benefit and we're excited to be presenting it to you today. The goal of this video is to introduce the 401k, go over what it is, how it works, and what the next steps are for you. So what is a 401k? Put simply, a 401k is a tool to save for retirement. In the 401k plan, savings are contributed automatically through payroll each pay period. In addition, you'll have the opportunity to get employer contributions to the plan, which we'll talk about more in a minute. The important thing here is that it's a retirement account. So before retirement, you can only access the money in rare hardship circumstances. If you do withdraw before age 59 and a half, you'll be subject to both taxes and a 10% penalty. So we highly discourage withdrawing the money before retirement. The other benefit of a 401k is that it allows you to save on taxes. When you make contributions to the 401k plan, you'll have the option to make contributions that are either Roth or traditional. With a Roth contribution, you pay taxes now, but you never have to pay taxes on that money again. With traditional, on the other hand, you get to tax deduction now, but then pay taxes on the withdrawals in retirement. For more detail on the difference between Roth and traditional and what might be best for you, check out our other video down below that goes through each one. Next, let's talk about how the 401k plan works. The first really important point to consider is that this 401k plan is set up as a pooled account. A pooled account means that your money is literally invested with everyone else's money in your plan and the same account at Charles Schwab. There's a TPA, or third-party administrator, who keeps track to the penny of each participant's money in the plan. Having a pooled account means that there's no app or online login where you can go to check your balance on a daily basis. Instead, you're going to have annual statements that will show your balance as of December 31st each year. The benefits of having a pooled account are that your money is going to be professionally managed, and also that shared fees equals lower fees. So when you share the fees and share one account, you get to keep more money and save and invest that for retirement. Again, we've created a video that goes over the pooled account in more detail, which you can check out below. Another important point to consider about the 401k plan is when you can become eligible. The eligibility requirements for most offices we work with are to work at least 1 year, to work over 1,000 hours in a 1-year period, and to be at least 21 years old. Once you meet these 3 requirements, you can start contributing to the plan on the next entry date. Entry dates are January 1st and July 1st of each year. Of course, you can change your contributions at any time after the entry date. So if you're already participating in a plan and you want to contribute more or less, feel free to change your contributions at any time. Now let's talk about contributions to the plan and how money can go into the plan on your behalf. First, there's employee contributions, or your contributions. These will be made through payroll each pay period, and can be either a percentage of your gross pay or a flat dollar amount. Next, there's employer contributions, or contributions that your office makes on your behalf. There's 2 different contributions that the employer can make. The first is the safe harbor contribution. This safe harbor contribution will either be a match or it will be a flat 3% of your pay, depending on which office you work in. If you're not sure which of these 2 applies to you, give us a call or shoot us an email and we can let you know which one applies for your office. If you do have the match in your office, the match will follow this table on the screen. In short, the match is dollar for dollar up to 3% of your pay and 50 cents on the dollar between 3% and 5% of your pay. That means that if you contribute 5%, the match is 4%, and that's the maximum match. You can of course contribute more, but the maximum match is 4%. The second way that the employer can make contributions is through a profit sharing contribution. This is a discretionary amount, and it depends on the office and the year. This isn't guaranteed, but you can look at it as an extra bonus that might be going into the 401k plan on your behalf. So now that we've talked about the 401k plan, what it is and how it works, let's briefly discuss the next steps for you, which will be to fill out the online enrollment forms. The first and most important of these is the salary deferral form. This will enable you to choose how much to contribute to the plan and whether to contribute Roth or traditional. An important point here is that it must be filled out, even if you do not want to contribute to the plan. Of course, making contributions to the 401k is totally voluntary, but we do ask that you fill this form out so that we have evidence that we've offered it to everyone. The second form for you to fill out is the beneficiary designation form. If you don't fill out this form, there is a default designation for what would happen to the money if you were to pass away. That default is as follows. 100% of the money would go to your living spouse. If you don't have a living spouse, it'll be divided equally among your living children. If you don't have a living spouse or living children, 100% of that money would go to your estate, at which point there would be state laws or your will might determine what happens to that money. We recommend that you fill out the beneficiary designation form regardless, so that it's very clear what you would like to have happen with your money in the plan. Both the salary deferral form and the beneficiary designation form are in the links right below this video. The third form applies if you're married and you'd like for someone other than your spouse to be the primary beneficiary to your plan assets. In this case, your spouse will also need to fill out the spousal consent to beneficiary designation. Again, this is in the link below, but this is going to be a PDF which you'll actually need to print, fill out by hand, and return to us. I hope this video has been helpful for you in introducing the 401k plan and walking you through the next steps to enroll. Of course, we're here to help with any questions that you might have. We have more videos on the site which go through frequently asked questions. You can also use the form down below to contact us and with any questions that you have. Or of course, you can just give us a call or shoot us an email. We're really excited to be working with you and are happy to be your partners as you save for retirement.